Bitcoin price plunges sharply amid market sell-off, erasing Trump-era rally gains. Published February 5, 2026. Bitcoin, the world's most popular cryptocurrency, experienced a dramatic slide on Thursday, underscoring a broader risk-off turn in global markets and erasing much of the price gains it enjoyed following the 2024 U.S. presidential election. Recent volatility has pushed the flagship crypto to levels not seen in nearly 15 months, steep decline to sub-$70,000 territory. On Thursday morning trading, Bitcoin fell below $70,000 for the first time in about a year, marking a significant drop from its record highs above $126,000 reached in October 2025. The cryptocurrency was trading around $66,000 to $67,000 by midday, representing roughly a 45% fall from its recent peak, according to market data. According to aggregated market coverage tied to CNN's reporting, Bitcoin's slump reflects deepening risk aversion among traders and a broad retreat from speculative assets. Despite theoretically favorable macro conditions, Bitcoin failed to act as a safe haven in the face of geopolitical and economic uncertainty, a contrast to traditional assets like gold, which have surged amid market stress. Wider crypto market under pressure. Bitcoin's slide has dragged down the broader cryptocurrency sector. Ether, the second-largest token by market value, has also suffered sharp losses, with prices dipping in line with overall crypto market weakness. Institutional investment products such as spot Bitcoin exchange-traded funds, ETFs, have seen significant outflows, compounding selling pressure and reducing liquidity in the market. The pullback coincides with significant liquidations in leveraged crypto positions and a retreat by institutional investors that had previously supported market advances. Analysts have noted that declining ETF demand reflects waning confidence among both retail and professional traders, macro factors, and market mood. Part of the market's malaise has been attributed to broader financial pressures. Equity markets, particularly technology stocks, have faced turbulence due to concerns around artificial intelligence earnings growth and shifting economic expectations, conditions that have made risk assets, including cryptocurrencies, less attractive. At the same time, geopolitical developments and uncertainty around future financial regulation have added to investor caution. Despite Bitcoin's narrative as digital gold, its performance in the recent sell-off has diverged sharply from actual safe haven assets. Gold prices have climbed as Bitcoin faltered, challenging the perception of crypto as a reliable store of value in times of stress, historical context, and investor sentiment. Bitcoin's current slump has erased the so-called Trump bump that followed the election of President Donald Trump in 2024, when expectations of more crypto-friendly policies helped fuel a major rally. But the recent downturn has brought prices back near or below levels seen before that political surge. Market sentiment remains fragile, with some analysts viewing the steep correction as part of a broader reset rather than just a short-lived dip. While past Bitcoin cycles have seen deep corrections followed by eventual rebounds, there is no consensus yet on whether this downturn marks a longer-term bottom. Looking ahead, investors are closely watching whether Bitcoin can stabilize above key technical support levels, particularly around $65,000 to $70,000. Breaching these levels decisively could signal deeper weakness, while a rebound could attract buyers back into the market. However, sentiment will likely remain cautious until clearer catalysts for demand reemerge.